once we get policy, once we get regulation. And I think you're right. The timing is probably 6-12 months, but Katie, bar the doors when that happens. It's going to be really wild. I think we kind of got in at the same time. We've been talking about it. We've been working together on Shark Tank for over a decade, so we watched the whole process boil up. But we're both highly regulated guys in terms of our other investments. I have a lot of investments in traditional financial services, and what concerned me always about crypto was the rogue nature of it in terms of the eyes of the regulator. And so having to stay compliant, I wasn't really able to go gung-ho into crypto until 2017, when other jurisdictions that I'm an investor in, like Canada and the United Arab Emirates and Switzerland and England, started to open up policy there. And those were the first places I started to invest. And so I've been, pretty down the rabbit hole since then, and an advocate for this, because I happen to believe over time it's going to be a very productive project. I mean, basically, Bitcoin's not a coin, it's software. And that's the same for all the other projects. And it's very productive in terms of whether you want to use it for payment systems or storage of wealth. It really determines your use case. But we need policy. That's where we're stuck now. Invited me to address all the legislators. It was a remarkable summit because they haven't had it for 2.5 years because of COVID. So they had full attendance from all over. Every state was there. It was like a national convention, bipartisan, I might add, both red and blue states in full attendance. And they wanted me specifically to talk about the crypto market and the new digital economy that's emerging in America, a lot of direct consumer. And that was related a lot to data centers. And let me give you the two big headlines out of that conference. First of all, crypto and data centers are on the mind of every state. It's gone from nowhere in their policy making to top of the agenda for a bunch of reasons. They're watching what's happening in DC with bills from Lummis and Haggerty and Toomey and the discussion on stablecoins, all of that stuff. But the granddaddy asset is Bitcoin. So Bitcoin mining is controversial because of the ESG mandate and the concern about using too much coal-fired electricity to mine that into coin. And I pointed out to them that there are states that have assets that allow you to do it on a clean basis and build data centers, and states that don't. And so let's take the case of New York City. There was a big project going upstate New York about 3 years ago. It was going to be one of the world's largest clean data centers that was being built behind the meter, which means direct power from Niagara Falls. And money was put in the ground. I was an investor in that project. I pointed out to the legislature, I said, look what happened here. We brought in hundreds of millions of dollars to build this, one of the world's largest data centers, and as policy got wonky and unstable and they started attacking Bitcoin miners, we simply moved it to Norway. At the same time, states like North Dakota, Governor Burgum, he said, hey, listen, why don't you bring that technology from Norway you got and bring it over here? We'll give you an opportunity to do a clean, giant Bitcoin mining / data center. And that's what happened just last week. So there's have states and have not states. And I said, look, I'm just an investor chasing the path of least resistance. Some of you guys get it. Some of you guys don't get it. And the states that get it are going to get all the capital, because you're talking about building 300 megawatt facility. That's $500 million. That's a lot of money. And you want those jobs in your state. That's the kind of conversation we were having. It's not that I'm just watching this policy. I'm going to Washington. I'm banging down the doors where I can. I'm taking meetings with every senator or congressman or woman that'll listen. I'm just one of those private investors that are going to the Hill and saying, look, here's why this has merit. Now, the real potential, we're kind of stuck in a range on Bitcoin right now with 23,000. Big miners are making coin, getting awarded coin around 7,000. So the economics are still there to put money in the ground. But the big opportunity, the mega opportunity for Bitcoin, and why I stay long and why I continue to allocate to Bitcoin, is when we get policy and institutions can allocate to it, sovereign wealth and pension institutions, they'll probably put 50 basis points, which is half of 1%, up to 1% into Bitcoin. And that's where you're going to break out of this range. They can't buy it yet. So for all of the excitement when we talk about institutional buyers, I'm also in the indexing business. I service the institutions and the sovereign funds with indexing. And they all tell me they want to index for Bitcoin, but they can't buy it. They don't have any policy. They don't have any compliance infrastructure. So we got to get this done. We got to get some policy. If it's just stable coins and Bitcoin, just those two asset classes, that's a huge win for everybody that's involved in crypto. Huge amount of capital come flowing in. When that happens, we don't know. The first indication would be allowing an ETF with the underlying asset being mark-to-market Bitcoin itself, like they've got up in Canada. We don't have to go crazy. We don't have to get 100 or 10,000 coins. If we could just get stablecoin policy, Bitcoin policy, maybe Ethereum, maybe Polygon, maybe Solana, that would be enough. That would be huge. That's a large amount of market cap just right now in crypto. A bill cooking right now just on US dollar and treasury bill backed stablecoin. That was going to be heard in August. It's been pushed till after the holiday, till September. They get audited every month, and they're not allowed to own assets supporting the money market unit price that have a duration of longer than 12 months. Same thing for stablecoin. It'll be the same idea. Look, if you're going to put out a coin and back it with US dollar, have a US dollar there. And if you're going to use T-bills, disclose how many T-bills you have and what the duration is, and let that be audited every month. Then we'd approve that. And the reason you got bipartisan support for something like that, think about, well, let's pick one, USDC. That's the one that was the most stable during the crazy Luna situation when algorithmic didn't work and it cratered. Not USDC, because it was backed by the US dollar. So let's just say those kind of, not just USDC, but any coin or any token or any payment system that's going to be backed by a dollar sticks with those rules. They're going to look at it and say, we don't care. Let's call it a payment system no different than when you're transferring capital. It's going to be the same rules as we dictated in a money market fund, and then let the market compete. And so you're going to have different players with different amounts of T-bills, different amounts of cash. But the point is there'd be regulation for them. And the use of those as payment systems would become global, and it would be backed by the US dollar. That supports the US dollar as the default currency of the earth. What politician, regardless of what side of the aisle, doesn't like that? And so that's the likely first step. When institutions see that happen, let's say we get lucky and it happens in September, that's when the focus goes to Bitcoin. That's when the granddaddy asset, the one that everybody wants, that'll be the next chip to fall. And I think that's when the big opportunity is going to happen. All of that action is going to happen in the back end of the year and early in Q1 of next year. I think we can get policy and perhaps an ETF backed by Bitcoin sometime in the first 6 months of 2023. That's why you got to be long now. You have, in my view, you want to be ahead of the market. When it comes to Bitcoin, the floodgates themselves is compliance infrastructure at the sovereign fund level, the Norway fund, the Saudis, the United Arab Emirates, our own states, pension plans, calling that asset, whatever we're going to call it, a commodity or a security, and we got that done. I don't care which direction it goes. Why wouldn't you be allocating to any portfolio a portion to Bitcoin, just like you would for real estate, just like you would for stocks, just like you would for bonds? That would really change the dynamic on Bitcoin. And when that happens, you have to make a decision. Do you get ahead of that curve, not knowing when that actually is going to occur? Or do you wait until it occurs? Because it'll be, in terms of price appreciation, I believe it'll be dramatic. You've opened up trillions of dollars worth of access to a new asset class. That doesn't happen too often. And I think all of the productivity and all the people that are working on the blockchain and all the projects out there, and I always remind people, Bitcoin is not a coin, it's software. There's lots of really smart guys leaving colleges that are engineering and moving to the United Arab Emirates or the Caribbean islands. They don't stay stateside because they don't have any policy. So all that intellectual capital could come back stateside. There'll be a lot of things happening once we get policy, once we get regulation. And I think you're right. The timing is probably 6-12 months. But Katie, bar the doors when that happens. It's going to be really wild. The theory of the inflection point is somewhere sort of 7 to 15%, and then it accelerates. I don't care what technology you look at. That has been the case, including all the way back to pornography. So, I mean, it goes back to when the adoption occurs and how fast it ramps afterwards. But I'll tell you, there's two things holding us up right now. Let's stay specific on Bitcoin. Wallet infrastructure, whether you go centralized or decentralized, is shit. It's just not good. And I'll tell you, I don't mean, excuse my French, it is shit. And the reason I say that is it doesn't hook up to the existing compliant infrastructure for institutional investors. when they buy Bitcoin, it's very difficult for them to plug it in to their portfolio mandates because all of the other assets, the majority of them, get marked to market at 4:01 in the afternoon, New York time. That's not the case for Bitcoin. It just keeps trading 24/7, as we all know. So there's a disconnect to the way that their own compliance departments say, well, how do I monitor this for 24/7 trading if you're using leverage? So when I talk to these guys about, and the women who manage these funds, they say, look, I'd love to own some Bitcoin, but there's nowhere to fit it in. I don't have any infrastructure. The wallets aren't secure. You saw the Solana hack again. I mean, we got a lot of work to do as an industry to clean it up, whether you believe in the centralized or decentralized model. I don't care. I use them both myself. But I have to admit, like everybody else in the nascent days, I've been ripped off on a decentralized wallet till I got the joke on security. Now it's hard to do that to me. But you have to go through the learning curve, and a lot of institutions just want to plug and play. You know, we heard the announcement that BlackRock's working with Coinbase. That's not going to really change much because there's not many institutions that are going to use the fees that Coinbase has. They'll probably go to FTX or Binance to do that. But I'm not saying Coinbase won't give an institutional pricing, but it doesn't matter. There's no demand yet. We need to fix the compliance that you plug in whatever register you've got, whatever wallet you've got, works right into your system. And that's the kind of stuff I'm working on. I mean, I talk to so many banks, so many institutions. It's always the same story. I call up compliance. I want to buy $1 million worth of Bitcoin. They just say, no, Nanette. Let me give you an example how I have done it as an investor. I've tried to find geographies where policy is more advanced. Let's just take Canada for a second. So WonderFi, a public Canadian company, I'm a strategic investor in it, has 720,000 accounts now that are 100% compliance in every province of that country underneath the OSC order. 100% compliant. Now, when you operate under a government order, and the OSC is like the SEC, except it's the Canadian version of it, they're very limited in terms of which coins you can actually trade. And so we've got 14, 15, 16 tokens, 15 positions, coins. That's all we get to use. But that's okay. It's got all the big daddies in there. It's got Bitcoin, Ethereum, Solana, Polygon, and many others. But the point is they're regulated.